So let's start with client background. So this is our client Hakim bin Rosli, a 50-year-old regional logistic manager, married to Farah, a 46-year-old marketing executive. They have 4 children and their youngest require medical rehabilitation. Hakim earns RM 16,200 per month with EPF and SOCSU contributions and enjoys benefit like a company car, maid salary reimbursement and an employee-provided bungalow. Other perks include a smart TV gift, bonuses, medical treatment paid, and a sponsored family holiday. There's also an unapproved pension withdrawal of RM 35,000. This detail gives us a clear view of his income, benefits, and financial obligations. So just a quick overview of client's financial background. Her husband has additional income sources including a foreign dividend of 21,000 ringgit, bank interest of 950 ringgit, and rental income from Malacca amounting 25,200 ringgit. On the expenses side, the family has several relief and expenditure. They contributed 2,100 ringgit in donation, spent 3,200 ringgit on sport equipment, and pay 180 ringgit per month for internet. Books cost 1,100 ringgit, and they recently purchased a tablet for their child at 3,500 ringgit. Significant medical expenses include 18,500 ringgit for child rehabilitation and 1,050 ringgit each for child medical insurance. Additionally, they pay 500 ringgit per month for life insurance and 6,000 ringgit for zakat. This gives us a clear picture of the financial position for tax planning purpose. So for the next slide, this slide shows the client background focusing on the wife's income and other earnings. Her main employment income is an annual salary of RM 78,000 with 11% EPF contribution on SOCSU of RM 297 ringgit. She also receives several benefits including a grooming allowance of RM 800 per year, child care allowance RM 4,400 per month, and a smartphone with RM 4,000 and phone bills paid amounting RM 2,100 ringgit. In addition, she has other income sources such as foreign interest of RM 3,400, local dividends of 3,200, and online banking income of RM 70,500. For tax purposes, separate assessment is elected and the husband claims all child relief.
Next, in this slide, I will explain Hakim bin Rosli's employment income under Section B of the Income Tax Act. His main employment income consists of a salary amounting to 194,000 ringgit and a performance bonus of 32,400 ringgit. Both are taxable under Section 13A. In addition, several benefits in kind are provided by the employer. These include a foreign domestic helper costing 26,400 ringgit each year, subsidized inventory and safety equipment worth 2,300 ringgit, as well as other benefits under Section 13(1)(b), such as smart television, Honda CR-V motorcar, free petrol, and holiday airfare. He is also provided with accommodation, so after deducting the furniture value, the taxable accommodation is 38,400 ringgit, being the lower of actual rental value or 30% of employment income. This results in a gross employment income of 312,900 ringgit. After deducting EPF and SOCSU contributions, the adjusted employment income is 291,188 ringgit. Next, we will consider Hakim's other sources of income. Under Section 4C, he received foreign dividend income from South Korea amounting to 21,000 ringgit. Under Section 4D, Hakim earned rental income with gross rent of 25,200 ringgit. After deducting the allowable expenses such as plumbing repairs and assessment and quick rent, the net rental income is 20,250 ringgit. He also received 18,000 from the withdrawal of an unapproved pension fund, which is taxable under Section 4E as other income. When all of sources of income are combined, Hakim's aggregate income amounts to 350,438 ringgit. In this slide, we will calculate the personal release and tax payable. Hakim is entitled to various release including individual relief, medical expenses for children, EPF contributions, life and medical insurance, lifestyle expenses, for equipment, donations and zakat. Total reliefs amount to 48,100 ringgit, and after deduct this from the aggregate income, Hakim's chargeable income is 302,000 to 338 ringgit. Income tax is calculated based on the progressive tax rates, resulting in a total tax charge of 61,554.64 ringgit Malaysia. After deducting zakat, paid as a rebate of 6,000, final income tax payable by Hakim bin Rosli is 55,554 ringgit 64 cents.
We go to the wife, Farah, for the total tax income computation. Section 4B. Employment income annual salary is 78,000. For Section 31A, grooming allowance is 800 and childcare support fund is 400 times 12 will be 4,800. For the tax exemption of childcare is 3,000 and the total will be 80,600. For the business income, section 4A, online banking, there is 17,500 and the total aggregate income is 9. For the relief, the individual dependent is 9,000, medical expense for parent is 1,000, breastfeeding equipment is 1,000, but there is no child relief because the husband will already been paid. Then the EPF contribution restated is 4,000. Social contribution is 297. Private retirement scheme is 3,000. So the total chargeable income will be 79,803 ringgit. Next, tax payable. Tax on the first 70,000 will be 3,700. For the balance of 9,803 ringgit will be times to 19% of rate. So the total will be 5,562.57 cent and will be deducted with zakat is 1,500. Then the net tax payable will be 4,062 ringgit 55 cent.
Next, I will explain the tax planning strategies for Hakim bin Rosli. First, the reimbursement for foreign domestic helper amounting to 26,400 is currently treated as the employment income under Section 13(1)(a). By restructuring this benefit so that the employer pays the helper directly, it can be classified as benefit in kind under Section 1B. This reduces Hakim gross employment income and lowers the taxable value of accommodation under Section 13(1)(c). Second, Hakim should maximize his SSPN contribution by contributing 8,000 at a 28% tax rate. This provides an immediate tax saving 2,240. Lastly, Hakim should replace non-deductible donations of medical items with cash donation to approved institution. Cash donations are deductible up to 10% of total income, allowing him to enjoy tax savings that are currently lost. In conclusion, these strategies help reduce Hakim tax payable while remaining fully compliant with tax regulations. Next, I will explain the tax planning strategies for Farah binti Hamdan. First, Farah has access PRS contribution of 2,500 above 3,000 limit. This access can be reallocated to SSPN, allowing her to maximize the 8,000 education relief. Second, Farah should fully utilize lifestyle relief by claiming eligible expenses such as business book, journals, and gadgets, and also claim the separate 1,000 sports relief. Third, Farah can claim motherhood-related reliefs by documenting expenses for breastfeeding equipment up to 1,000 and childcare centers fees up to 3,000. Next, as a business owner, Farah should deduct expenses wholly and exclusively incurred for business purposes, such as advertising and utilities, to reduce her Section 4A business income. Lastly, Farah should optimize her insurance planning by aligning medical and education insurance premium to fully utilize the enhanced 4,000 relief for year-end 2025. In conclusion, these strategies help Farah to minimize her tax liability while staying compliant with tax regulations. In conclusion, this assignment analyzes the tax liability of Hakim bin Rosli and Farah binti Hamdan for the year of assessment 2025 based on the Income Tax Act 1967. Hakim's tax payable is 61,444.64 reduced to 54,454.64 after zakat relief, while Farah's tax payable is 5,562.57 with net payable of 4,062.57 after zakat. The tax planning review highlights potential tax savings such as restructuring Hakim's domestic worker benefit and maximizing SSPN contributions, as well as improving Farah's expense documentation and fully utilizing lifestyle and childcare reliefs to further reduce their tax burden. Thank you.